Greetings, members, one and all of the Salivation Nation. Gold, nothing more, nothing less, and nothing else. Let's explore. Ran across a very interesting article by Kelsey Williams that is very thought-provoking, and I thought I'd share parts of this with you. It kind of affirms pretty much what most of us believe about gold. So I think in many aspects, for those of you new to gold, I think we'll find this quite interesting and fascinating. Maybe you'll learn something. But there's some new concepts and some things that kind of fly in the face of conventional wisdom here. Let's talk a little bit about this article and about what he's talking about here to help us have a better understanding of this metal that has perplexed and also mesmerized mankind for thousands of years. Gold is real money, nothing more. That's a hard pill for some investors and advisors to swallow. It's the second part of that statement that raises the most concern, and that's just it. It is what it is. It doesn't react. It just is considered money, and its status as money, that most of us have recognized throughout history, has been confirmed by the Bank of International Settlements through its Basel III Accords, which have been written since about 2014 and 2015. Where it recognized gold as a Tier 1 asset, on par and equal to cold, hard cash. More than just a few people will readily affirm their belief that gold is real money. Beyond that, though, there's a tendency to get carried away with the descriptions and analysis regarding the fundamentals for gold. And admittedly, this channel has probably gotten carried away with some of those fundamentals. We talk a lot about gold on this channel, and silver too. But really, especially over the last 5 years or so, I have focused a bit more on gold than I have silver. Although I do love silver and still believe in it, I've really kind of shifted focus more in that area. The fundamentals are many and varied, but really don't have anything to do with gold or its price. As the cumulative loss in purchasing power of the US dollar becomes more apparent, and as the price of gold continues to rise, more people will take notice. In fact, when the price is low, we know that people don't take notice. Much as I didn't take much notice back when gold dropped, and I was into precious metals then, but I was discouraged by the low price of gold. Oh, if I could only turn that clock back, I would definitely have taken notice now, especially with what I know now. Investors and consumers are price conscious, which is fine. The problem is that most of them confuse price versus value. Now, you know that's something that I've talked about on this channel time and time again. And that's something that you have to recognize. And I wish that was something that I would have recognized back when gold was trading at a price that I remember distinctively. $252 an ounce. If I would have recognized the value, that price would have been a bargain. The only reason the price of gold goes up is to reflect the loss in purchasing power of the US dollar. Now, I don't necessarily agree with that statement in total. There's a lot of factors that affect the price of gold from day to day. But the price reflecting the value is what the author, I think, is meant to say in that statement. And he gets to that point towards the end. We'll get to that in a moment. The rising price of gold is correlated inversely to the US dollar's actual purchasing power loss. Now that is a fundamental that is undeniable for sure. Specifically, that means a higher price occurs after the effects of inflation have settled in and taken their toll, not before and not in anticipation of those effects. So that means that we should ask the question, have we really seen the effects of inflation yet? Or are we still just anticipating them? Yes, inflation as of the recording of this video is almost 7%, which is much higher than the Fed's target. But have we really seen the effects of it really play out yet? And we certainly have at the gas pump. We certainly have when we shop at the stores, but it is not translated yet into the marketplace. And in reality, it hasn't really had, other than just the pain in our wallets, it hasn't had as the effect on the overall general economy yet. It is having an effect, don't get me wrong, but it's not taken their toll completely yet on a large scale. There is a difference there. Gold's higher price in dollars at any time never represents an increase in gold's value and is always indicative of dollar weakness that has already occurred. That's the key here. I think that's an interesting fundamental that Mr. Williams says here. Gold's value is constant and unchanging, something you've heard me talk about in this channel time and time again. That's the thing we should see. Price and value are two different things. We should not let price get in the way of recognizing gold's value. That is fundamental. And this is why gold is the perfect money, because it's constant and unchanging. Gold is original money and a long-term store of value. And that is an important thing to consider. I believe it's money because these central banks are holding it right now and even transacting between these central banks with these gold reserves. And you've heard me talk about how nations are acquiring more gold and storing it. If it was not money, then central banks would not store it. So that really, in a nutshell, is what gold is, and it's nothing more than that. It is money. Now, the nothing less portion is quite interesting in here. As much as it is true that people focus on gold when its price is rising, they tend to ignore and disregard it when the price is declining. The example I gave earlier about me is a prime example of that. They become disinterested over longer periods. In their words, it isn't doing anything. Of course, I refer back to the previous section. It is what it is. It doesn't react. It doesn't do anything. That's part of the what I think is an attractive measure about gold, is that it doesn't do anything. We are currently seeing some negative responses to gold's failure to respond to fundamentals, and as a result, gold's price is not meeting or exceeding its expectations. A similar thing happened when gold peaked in 1980. Many people were convinced that the dollar would be decimated by runaway inflation, and that the price of gold would move well beyond $1,000 an ounce. It peaked briefly at $850 an ounce. And so that is quite interesting. And so people were thinking, and I remember in 2011 when the same thing happened, and I was more focused on silver then, I thought for sure it would go past $50 an ounce. It didn't. As the years passed, discouragement found a home, and eventually apathy reigned. The effects of inflation became less and less an obvious issue. The stock market was rising rapidly, and the economy was booming. After 20 years, gold was under $300 an ounce, and as low as $250 an ounce. In fact, hence to what I referred to before, it was not uncommon to hear things like gold is dead, and who needs gold? That's right, and I was one of those. Hey, it's crazy low right now. Why do I need this yellow metal when it's only $250 an ounce? Why would I want this? I don't need this. Boy, if I could turn that clock back. If I could only turn that clock back. However, all during the 1980 through the 2000, the U.S. dollar was stable and stronger. With the apparent effects of inflation on the wane, the U.S. dollar found favor on a worldwide basis. Periods of rising gold prices and weaker dollar contrast with other periods of declining gold prices and a stable or stronger U.S. dollar that was seen, and we've seen that occur with the periods where the prices spiked, creating some fundamentals or some very interesting activity that occurred during these times. These turning points for gold that are reflected that we throughout the course of history here, since there's 5 turning points: 1933, 1971, 1980, and 2000. And 2011 coincided with major turning points in the U.S. dollar. Gold is priced in U.S. dollars, and since the U.S. dollar is in a state of perpetual decline, the U.S. dollar price of gold will continue to rise over time. And that's the key, over time. And so, in other words, we will see periods in between that time where the price of gold will fall. And we saw that this year. As of the recording of this video, we've seen the price of gold fall from its all-time highs that we saw recently at the end of, or the summer of 2020. There are periodic changes in U.S. dollar valuations, and these changes can last for years, such as from 1980 to 2000 and 2011 through 2016. And the period between 2011 and 2016 is a period where many of our YouTube channels and commentaries, video commentaries on social media platforms have really taken off. And we've witnessed this decline in the price. During such period, the price of gold can and does decline considerably. And we are seemingly in such a period now. But really, it's much higher than it was before. It's staying up there fairly high, but it is kind of on the way down, at least. And we could see that heading into the next calendar year here. Over the past year and a half, the price of gold has declined, reflecting strength and stability of the U.S. dollar, which is kind of a strange thing to say, especially when we have inflation pushing at 7% now. It's hard to really grasp that. Over the past year and a half, we've seen the strength of the dollar up, and to that extent, the decline continues, depends on how the U.S. dollar fares. So with that being said, we move on to the nothing else portion. And something that we've got to have to understand, that gold is not an investment. And you've heard me talk about that as well. And people certainly react to that. And I've seen it on my channel and others as well. It's not an investment. And he actually says, Mr. Williams says, it's not a hedge against inflation. In fact, gold is even subject to inflation. In fact, I think we're seeing that to a degree right now with inflation affecting premiums on gold. And, inflation is something that's defined several different ways. What can feed it? Obviously, what feeds inflation is when they print more money and the velocity of that money, but there continues, but also continues to increase. And then also we see other things like supply chain issues and bottlenecks in production. That type of thing can cause prices to go up. That's a different kind of inflation, but inflation nonetheless. Prices go up. Gold's price is not influenced by political instability, social unrest, insurrection, or war, he goes on to say. It does not change in price or value due to headline economic statistics or a weak economy. Now, let me preface, I'm going to have a little something to say about those two statements. I believe gold's price is influenced by political instability, social unrest, insurrection, or war. I believe those types of things, and we've seen it also with the pandemic as well, do influence the price in the short term. Yes, indeed, they do. So I disagree with him there. It also, due to headline economic statistics or a weak economy, we've seen that time and time again. Whenever the Fed speaks, whenever there's something that comes out of the Federal Reserve's meetings, notes, and statements, it can move the price of gold like that, and it does. So I disagree with him there. But that's talking about price. It does not reflect value. So, but anyways, gold is not correlated in any manner to those things, according to the author. The only reason for the higher price of gold, and here's the key phrase here, over time, and that is exactly right. This is where I do agree with him, is the continual loss in purchasing power of the U.S. dollar. That's this thing right here. The U.S. dollar. When that dollar price declines, and it does by design by the Federal Reserve, you will see gold go up over time. And what is the target for the inflation for the dollar? In other words, the devaluation of the dollar? It's 2% in a normal, healthy economy. Sooner or later, it's going to decline. And it's by design. It's what happens. It's what it does. It's what they do. Now, and I remember reporting on this, that the Fed have basically has resigned itself to 2.5%, and now they've transitioned from that to inflation is transitory to now inflation is temporary, or it's going to start declining soon. But in reality, it's here. It's probably going to be with us for a while, and we don't know where it's going to go. It could go to a rapid, out of control inflation or hyperinflation mode. We don't know. Whatever happens, and with the effects of the economy when they come, that's going to have an effect on the price of gold. And it's going to be immediate, and it's going to be powerful, I believe, when that time comes. And we'll see. We'll see how that comes out. But it is something that over time we will see gold basically reassert its value. The reassertion of value is something that I think is key, fundamental, that we can take away from this video. And I think we can have the confidence of knowing that we're doing the right thing by holding this metal. And that is the key. And I think that is essentially what Mr. Williams is trying to portray here. And so I think the basic thing we need to do is to not have unrealistic expectations for gold. As he concludes, those unrealistic expectations lead to disillusionment, which we do not want. That's what part of what this channel is about, is to try to rein in some of the hype around gold, and silver too. But it's, I think the best thing we can do is be real about silver and gold. One of the things that I always say about gold is it sells itself. It is what it is. It's nothing more. It's nothing less. And it's nothing else. So there you go. As far as gold is concerned, the entire precious metals arena is awash in proclamations and predictions that have no real fundamental basis. By the way, I make predictions and have made predictions on gold and silver in the past. I don't take them seriously, but I will probably continue to do it based just because they're fun. But I always tell you that I'm not a financial advisor and to not take my predictions seriously. But it is fun to talk about, and that's what we do on this channel. But in the end, the advice I'm giving to you now is essentially in concert with what this article is talking about, and that is just to recognize gold for what it is. It's nothing more than what it is. It's nothing less, and really, there's nothing else like it in the world. So there you have it. Let me know what your thoughts are in the comments section below. I hope you enjoyed this video. Would like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.